Hi there, I'm David from DEB Chartered Accountants. Under the current provisions, which have been enforced since 2002, bad debt relief for VAT can be claimed once 6 months has elapsed from the due date for the payment of the relevant supply, or 6 months after the tax point if this is later. For a claim to be made, the debt must have been written off. Now, for VAT purposes only, this means that it must have been recorded in a refunds for bad debts account. This may be purely a memorandum account kept manually outside of your main accounting system. In other words, it's no more and no less than a written record of the sums unpaid and the VAT element of those sums. This should be kept to be made available to HMRC should they request sight of it. The debt doesn't necessarily have to be bad. The relief in reality is very much a relief for the refund of VAT on slow paying customers. Equally, if you don't pay a supplier's invoice for 6 months on which you have claimed input tax, then there's a requirement that you pay it back to HMRC. A claim for VAT on slow paying debtors can be made if the 6 months have elapsed by the date of submission of the VAT return, even if they had not elapsed by the end of the VAT period to which the return relates. A claim does not negate the sale nor create a purchase. No adjustments should therefore be made to either box 6 or 7 of the VAT return unless the sum claimed when added to input tax takes box 4 to a level exceeding 20% of box 7. In which case box 7 should be artificially inflated to a sum sufficient to justify the box 4 figure. Bad debts is only a problem for those that do VAT on an accruals basis. Instant relief for slow paying customers can be obtained by switching from the accruals basis of doing your VAT returns to the cash accounting basis. This can be backdated to the day after the last VAT return has been submitted. Cash accounting, of course, allows output VAT not to be accounted for until payment has been received, at the cost of not being able to claim the input VAT on your purchases until payment has been made. Thus, for some businesses, this may or may not be helpful. For those who it would be helpful, the threshold for entry is an expected forthcoming 12 months taxable turnover of no more than 1.35 million net of VAT. There must be some businesses that prior to lockdown would not meet this requirement, who can now switch to cash accounting due to the impact the coronavirus pandemic has made on their sales. Such a change should of course be discussed with your accountant before it is made. Hope this was of help to you. Please subscribe to our YouTube channel to get notifications of new videos when they are uploaded. And also please share this with others to help them out. Keep well and safe. Bye for now.